Hey everyone, this is June from Turning Point Life Investment, and this video is for August 16, 2008. Since the market didn't really do a whole lot this week, I have some spare time and do an extra video for you guys. Now, the video I'm going to do is for oil. Specifically, it's an ETF called USO, and it tracks the crude oil, and I think it's a pretty good measurement of the actual crude prices. Now, just like how we analyze the market, we always want to look at from the top down kind of pattern, starting with the weekly view. Now, here's the thing. We had a pretty good uptrend, as most of you know, this past year. Okay, prices have been trading above both the 20 and the 50-week moving average. We hit a top at 120 and a nice reversal right here with a nice large bearish engulfing pattern right there. All right. So here's the thing. Prices are still, you can still call this an uptrend because why? We haven't had a lower high yet. Okay, definition of a downtrend is a series of lower lows and lower highs. Not until if prices are able to break above 120, okay, then we still have a nice confirming uptrend. But if any failed rally underneath 120, you can say that's a lower high. And by definition, that's in some sense a start of a downtrend. Okay, but right now there's really nothing confirming as far as a change in sentiment, a change in trend. But we do know that obviously that there's been a whole lot of selling pressure for oil. And that's usually what happens when you have something that's so speculative. Okay, as soon as profit taking happens, it happens pretty fast. And it's pulled back to 90. Okay, prices did hit $90.04 to be exact on Friday. Right, nice even number. Okay, I can't mention that enough. Even numbers are always great support and resistance. And it's pulling back to the 50-week right here. Right, let me zoom in just a little bit. So it's pulling back right above the 50-week, and the body, you can see the candle of the body is smaller. These are large bodies right here. See, large dark bodies. So that means selling pressure is high. But we are getting I guess you can say the bear is getting kind of weak. If you notice the size of the candle, it's much smaller. Okay, so it's not pushing prices any lower. Right, so we notice the bear is getting kind of weak. Let's look at the daily view. Now, normally, I don't usually trade reversals, okay, because they're basically you only get one chance to be right. Either you call the top or you don't, right? Same thing, either you call the bottom or you don't. So, same thing, right? Prices have been trading above the 20 and the 50-week moving average. Every time I pulled back right here, right here, right here, good entry points, all right? Now we have a reverse. Now it's trading below the moving average. Let me zoom in a little bit. We had a nice pullback and it tagged the 20-week moving average, and then it started selling off again. Okay, now we have a possible extreme condition, as you can see right here, oversold condition in the moving in the stochastic. MACD, you can say it's diverging. Okay, notice how this peak is much weaker than this peak. Okay, even though prices are moving lower. So that's what divergence is. Now I want to slap on something interesting here. This is the 200-day moving average. And guess where prices are? Right above the 200-day moving average. Okay? And it stopped right at 90, nice even number. So, if we were to trade this, you can absolutely trade this. You can put a nice tight stop right underneath 90, probably 89, I don't know, 89.75, 89.70, okay, depending how wide your stop is. But we basically have a $2 stop. Our upside target, since the prices did tag the 20-week, the chances of it tagging the 20-week again is pretty high, right? And we also have some sort of resistance right around this level right here. Okay, so that will bring us probably to the $97, $98 area. So we have about $6 target and a $2 stop. So that pretty much gives us almost a 3-to-1 reward to risk ratio, which is pretty good. Okay. If it breaks above the 20, then obviously you look for the, sorry about that, telemarketers. So anyway, as I was saying, lost my train of thought. Anyway, it broke. If prices do break the 20-day moving average, then look for a retracement back to the 50-day moving average, and that'll probably bring us about the $100 mark. Okay, once again, round number. Good second target. Okay, so this is our first target at 97.98. Second target at 100. Now, if you're going to trade calls, if you just want to buy straight calls, I recommend doing the October month. August is already done, and then September would be the front month. Now you can absolutely trade the front month in September, but I much prefer in October. It gives you more time. Okay, time decay isn't as bad. Time decay is the fastest in the last 30 days. So October month calls. This is the delta column right here. I would prefer trading calls that are at least deltas of 0.7 or higher. So probably like this one right here. That's an 84 strike call. Okay, it'll cost 11.80 per contract. Okay, but at least you get a really large delta. So at least every time USO moves, you gain 72 cents for every dollar USO moves up a buck. Okay, so you don't want to pick anything cheaper because you're not really getting the bulk of the movement. All right, and anything higher, then well, I don't know, unless you like to pay high premium. Okay, you want to find a good balance. You want to find a decent amount of premium that you're going to pay for, but yet at the same time you get a nice movement in your option when the stock does move. All right, so hopefully this video helps, gives you some perspective on how I'm looking at oil right now. All right, thanks.